The Wall Street hits a speed break after yesterday's big rally on the back of Donald Trump's return. Frontline indices slump over 1% in trade. Broader markets relatively outperform.
The big nifty loser, Hindalco, slips after Novelis withdraws its short-term EBITDA per ton guidance after a weak quarter. Higher scrap prices on increased purchases by China impact the business. Meanwhile, Trent slumps despite a 39% growth in revenue and 47% profit after tax jump.
The big winners today, Apollo Hospitals beats profit estimates, riding on healthy growth across verticals. The healthcare major expects steady occupancy with higher revenue per bed in the second half of the year. While Gujarat Gas reports a good Q2, the company sees strong margin expansion year on year. Both stocks gain over 6% and 3% respectively. Hello and welcome to a fresh new edition of Markets Forward, your go-to show. We'll tell you what went on today. We'll get you set for tomorrow's trading session as well. I'm Nigel. With me is Surbi. Well, Surbi, is that sort of a day, right? It was up and away in yesterday's trading session, and today we pulled all of that back.
Oh, yes, absolutely. It's quite a disappointment. And it wasn't even a volatile kind of a day, some ups, up and down. It was just entirely down today. That's what played out. But we'll talk about a lot as we go forward. Plenty of management commentary, lots of earnings to cover as well. So keep yourself glued to the screen because we have a lot to track. But let's look at sort of what really went on today in terms of the market action.
Well, the bulls were hungover today. Yesterday was the Trump party. Today, in fact, the bulls were hungover, and that's why we did see the markets had come in for some profit taking. And there were a couple of big earnings misses. Hindalco's Novelis, well, those numbers out there weren't very, very good, and the commentary was weak, which was the problem pocket. They're also talking about auto slowdown in Europe, which hurt Hindalco in today's trade. The other one was Trent. Well, the numbers were pretty much okay. One could debate how good, how bad. But at these valuations, market wants blockbuster numbers. And that's the other one that sold off in trade. Apollo Hospitals, well, that was the standout performer. Big gainer on the Nifty. That ended higher with solid gains. And the broader markets, well, they were actually relative outperformers because the index itself didn't fall as much as the Nifty. And a day like today, when the index was down more than 1%, it appears, the markets were weak. You had quite a few stocks that did quite well, particularly towards the end of trade. You had NCC, Page Industries. Both of them did pop up in trade.
Yeah, absolutely. So some of those earnings hits brought a little bit of green on the screen, but otherwise it was a weak session. Before I talk about our market, take a look at what China has done today, because a lot of the other global markets still continued on in the positive sentiment with the positive momentum. China markets were up almost 2%, especially if you look at Hong Kong. Now, there's a lot of chatter going on. A, we're awaiting, of course, more policy stimulus in China, maybe by the end of the week or over the weekend. And B, some of the statements coming in from the Commerce Ministry spokespersons were very, very reconciliatory towards incoming US president, and that worked well for the Chinese market. Anyway, talk about the situation here at home. The Nifty was down, the mid-cap index lost some ground, and the advanced decline ratio was really weak in the market today. If you look at it, far more many stocks declining than advancing, and that's something that you have to keep in mind. The other factor, which was a little worrisome, was the fact that today almost all sectors fell. If you look at the Nifty heat map, then whether it is healthcare, energy, metals, auto, banks, across the board selling coming through, which is a little unusual. Usually you have something positive and the rest of it negative. Today, look at that. The Nifty PSU bank, it's not even positive. It's maybe 1 point up, which is why that percentage is showing 0.00%. So basically, the fall was fairly wide in terms of the sectoral spread as well. And we'll tell you more about it as we go on. So let's get to the lineup of the show then. We'll bring in Hormaz to understand really what fell and what managed to buck the trend today, and all the stock-specific actions will come through. Then packed day for earnings, so we'll look at stocks like Hindalco and Trent. They were some of the big losers. Gujarat Gas powered ahead. We'll tell you why in just a bit. Last but not the least, we'll of course dive into all the key events to watch tomorrow. But first up, Hormaz. So back with the color red today.
Law of average is catching up with the indices, right? A day and a half of moves, and now we are finally back in the red. The benchmarks, the broader markets. But again, plenty of earnings reactions that were driving the moves today. Apollo Hospitals was a positive move, of course, 6.5% higher. Well, Trent, you aim for Mars, you give them Earth, and then this is what happened, 6.5% lower after the results. Blue Star was another earnings reaction. Page Industries, after results, came in just before closing, ended 2% higher. And Escorts and some of them like NCC also reacting to results. Metals were a cool-off in today's session, led predominantly by Hindalco after the guidance suspension by Novelis, 8.5% lower on Hindalco. Vedanta as well selling off in today's session, as did most of the metal names. Pharma as well, another index that was under pressure. Most of the constituents on the Nifty Pharma who are in the red today, led by Glenmark, was down 6.5%, and Ajanta, Aurobindo, Gland, all of them selling off in today's session. MSCI was a big announcement earlier this morning. The stocks reacted as well, but with the market moves, even they cooled off from the highs of the day. Volta saw a big move towards the close, but PB Fintech with the weightage increase, BSC will be the inclusion, and Adani Energy Solutions, the non-inclusion, ending 10.5% lower. And lastly, stocks that did well on volume, some of them that bucked the trend in today's session with ITI, Swan Energy, KC International continues to move ahead, as did Welspun Corp that had a good day on strong volumes. Back to you guys.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's go across to our guests. We have Ambareesh Baliga and Shilpa Rout of Prabhudas who joins us on the show. Hi, ladies and gentlemen. Thanks a lot for joining in. Well, Shilpa, you tell us. Today's close wasn't great, mind you. If you were hoping that we'll pull back towards the end of trade, that didn't take place. However, we're still defending the 24,070 mark, which is the first reference point. What's your view? Do you think we're going to go ahead and break the recent low? Or do you think this is a par for course pullback and we'll trend higher from here?
Nigel, we have been speaking about this. The FI's net longs, it's actually hovering in between 22% to 25%. So as long as there's no clarity, from FI's end that, whether there's some sort of bottoming happening right now, or we are still, close to see some more levels of shorts there. So in that case, this confusion is still there. So, if we just go by index levels and, data points, so 23,800 is likely to be a support for now, and 24,600 is likely to be the resistance. So this 700, 800 points band can continue for a while. And any sort of breach on any one side, you will see a 300 to 400 points in a quick move there. So as long as it is not happening, so this range will definitely likely continue. So you have to plan your trades, accordingly. Talking about Bank Nifty is also on that weakish tone where 51,000, should act as a support. And from here, the upside is also very much capped at around 52,600 to 700. So there's again, 1,500, 1,700 points, up trading band for Bank Nifty. So there's not much to say about indices because markets are also actually giving not much of a clarity. So as long as it is this way, the sideways, texture will continue.
Okay, all right. Got that, Shilpa. Well, Ambareesh, I'm coming across to you. I wanted your view on Hindalco. And that one was lower in today's trading session. This has Novelis numbers were soft and the guidance was weak. Now, first, the past quarter's numbers, well, the adjusted EBITDA was impacted due to the $25 million impact from flooding in Switzerland plant. Well, the other factors that hurt the operational performance included the unfavorable mix from lower automotive shipments. Even excluding the flood impact, well, the adjusted EBITDA margin was still weak because it came in at around $502 per ton. That was because of lower scrap spreads. Now, the reason the stock sold off, though, is because the management withdrew the short-term EBITDA guidance, which was at around $525 per ton. The reason for withdrawal of guidance is there is pressure on scrap spreads. Now, China liberated its policy, which has accelerated aluminium scrap purchase. That's led to a sharp increase in scrap prices. And that's why there is pressure on scrap spread itself. Now, with over 60% of Novelis' product mix relying on scrap, the rising scrap prices will elevate cost and pressurize the near-term profitability. In addition to all these factors, Q3 as it is a seasonally soft quarter. So because of the past quarter that was weak, but more importantly, because they've withdrawn that guidance of EBITDA per ton of $525 per ton, the street sold off the stock. Ambareesh, what's your take? The alumina story still looks good, which will support aluminium prices. Right. 8% was excessive, or do you think it's good? I ask you this because FY26, they're still saying the expansion will come on stream, and then they'll be able to do from that expanded plant closer around $600 per ton.
Absolutely. But then, see, from a short to medium term perspective, clearly the numbers were below what the market was expecting. But even that the market would have accepted. But what spooked the investors and traders basically is the withdrawal of the EBITDA guidance. I think that's what spooked the markets, and because of which we saw the stock falling. But then I think this would be more temporary. That's the reason I said this could be a short-term to medium-term sort of phenomena. So at lower levels, clearly, one should be looking at FY26, FY27 and look at buying, but not right now.
Okay. All right, got it. So that's a view on Hindalco. Was in the news for all the wrong reasons. Big cut coming through over there. Let's look at another stock which had to deal with a lot of pressure, and that is Trent. Soon after the numbers came in, the stock was down. And in fact, it was down almost 9% at one point in time. Finally closed with a cut of about 6.5%, despite 39% growth in revenue and a 47% jump in profits. So what is the big disappointment? Is it valuations? Is it something else? Let's go across to Mangalam. Mangalam, so how do you describe the results, first of all? I mean, were they really that bad?
Well, you've got to pay the price of being Trent, right? The stock has rallied about 165% despite a 20% downtick from the up itself. And when you're consistently giving over 35-40% sort of revenue and net profit growth, the street attunes itself to that, and that's what the elevated expectations were all about. On an absolute basis, in the second quarter, Trent's revenue was up 39%, and like you pointed out, the EBITDA was up 41%, and the net profit was up 47% as well. But street was expecting around a 42-43% sort of revenue growth and a 60-70% net profit growth. The net profit growth was slightly below expectations on account of non-operational reasons. Depreciation was higher, share of JV profit was lower, tax expense was higher, and as was other income, which was lower as well. On the environment, the company did say that the retail business has been facing headwinds due to muted consumer sentiment coupled with seasonality, not something that different from what all the other consumer companies have been saying. But Trent has, in that, reported strong results of 39% revenue growth and 47% net profit growth as well. But remember, going into these numbers, the stock was trading at around 95, 96 times price to earnings. That's now come down to around 90 times. And after having rallied, maybe a bit of moderation was expected on account of a slight disappointment in these numbers. Numbers by themselves, fairly good, but as compared to expectations and the market mood, maybe slightly disappointing.
Yeah, I guess, I mean, when you're like an Olympic champion, if you're a swimmer and if you're an Olympian, then people expect you to constantly perform that way, right? Then just normal swimming won't be enough, I guess. All right, thanks for that. Let's go across to Ambareesh. Ambareesh, an interesting conundrum on Trent, because you are getting it off the peak now, well off the peak. Exactly. Would you be a buyer in the stock, or are you still uncomfortable with the valuations?
I would say it's still quite expensive. We'll wait for lower levels. Because, see, if you look at it standalone, I mean, the revenue growth was very good, 40% Y on Y. Only, I think, 1.3% Q on Q. So revenue was below expectations. EBITDA, I mean, clearly the expectations were closer to about 690, 700. It came at 643. The PAT, the expectation was closer to about 450. It came at 335. And now if you look at it from the perspective of the stock price, I mean, last year to now, I mean, it had moved about 3x. Whereas moved 3x, you're just expecting a 50-60% rise in revenue. Even that is not happening. Then clearly, I think the market would be disappointed. And because of which I see the stock still correcting further from here. I mean, I'll not be surprised. I mean, if we see levels closer to about 5,500 or so. So, I mean, I still see another 1,000 rupees being shaved off from here.
Wow, another 1,000 rupees down on Trent. That's, yeah, that's a bearish call.
But at 5,500, you'll be a buyer.
5,500, yes. I mean, I would review and possibly buy at those levels. But I won't stick my neck out today and say I'll buy at 5,500.
Okay, technically, how's it looking? Shilpa?
Trent, if you ask me, the setup as per option chain is that, you have a very strong support at around 6,200 zones, and the upside is actually well elevated towards 7,500 also. The upside still looks at a very large potential and limited downside. But I would still, like to wait for a couple of days to see if 6,200 levels are getting hit or not. So, any further dips of 100 to 200 points in Trend, keep a stop loss of 6,200, and, then again, maybe go long for a trading target of around 7,000 to 7,500. Okay,
all right, got that. Thanks for that, Shilpa. Let's quickly move on. Gujarat Gas was a stock that managed to move higher in an otherwise weak market. The company reported a good margin performance, though volumes were a little weak. Let's go across to Sonal for the details. Sonal?
Well, for Gujarat Gas, it was strong margin performance but weak volumes. That's how you can summarize these numbers this time around. If we compare the numbers to the poll, revenues were slightly lower, but it was the strong margin performance that the street liked. EBITDA came in around 60 crores higher at 514 crore rupees. Margins 200 basis points better than the poll to come in at 13.6%, and profit was a beat by 50 crores at 307 crore rupees. However, quarter on quarter, it was a decline. This was something which was expected. Revenues declined 15%. We had EBITDA declining by 4%. Margins came in at 13.6%, which compares with 12%, but profits were lower by 7%. Now, let's talk about the volumes. They have been disappointing. Came in at 8.75 MMSCMD, which compares with 9.1, which was the poll. And this was because of number of reasons. First, the industrial volumes, that's the Morbi volumes, they were lower. And that is because there has been subdued export demand for ceramic industry. The monsoon season impacted demand as well. Unfavorable propane gas economics because propane was cheaper than natural gas. And customers also faced shipping issues due to global disturbances. Now, let's talk about the gross margin level. That is something which has improved 12% YOY, 20% sequentially, and EBITDA per SCM also improved. So that is the number that the street seems to like, because gas prices have been higher. Despite that, the company has been able to maintain or actually improve their margins this time.
All right, Sonal got it. So that explains the up move on that particular stock from the oil and gas space. Let's move on to some more names. PB Fintech was up about 4 to 5% after positive commentary came in from brokerage Jefferies. This is, of course, after the company's results came out. Jefferies has raised the target price on the stock as well. Yash has all the details. Yash, what is making Jefferies optimistic on PB Fintech?
Well, a strong show as far as PB Fintech is concerned in today's trading session, and there are three things which have aided to this up move in the stock today. One, of course, the results were operationally very, very strong, though on the top line front, the numbers were still finding their feet. The second one was strong commentary from the management in the earnings call, and the third one was interesting brokerage notes which sounded bullish as far as PB Fintech is concerned. One such interesting note came from Jefferies. They've retained buy on the stock. They've raised the target price to 2,000 rupees per share from 1,800 earlier. They've headlined this report saying that growth remains unabated for PB Fintech, and renewal, that growth is stacking up for the company. As far as growth momentum is concerned, Jefferies says that growth momentum is aided by core online premium growth. Second thing, the growth, strong growth in the renewal revenue has aided the EBITDA margin expansion. And second, the same strong growth in the renewal has offset the drag as far as the credit business of PB Fintech is concerned. The new initiatives are in the fast lane as far as the company is concerned, and that is Jefferies has raised the DCF growth by about 100 basis points for the company. They're building a growth of 31% between FY25 to FY26 estimates and 20% for the next 5 years.
Got it. All right, Yash, thanks a lot for that. Well, we'll also thank our guest, Shilpa, as well as Ambareesh. Appreciate you all joining in and wishing you all a good rest of the evening. Well, as we slip into a short break, well, there's some exciting news for all our viewers. Seize the opportunity to end India's landmark economic summit. Show us you're a true CNBC TV 18 fan by answering a simple question in our Superfan contest. Head over to CNBC TV 18 social media channels to participate and get a chance to win a free ticket to the CNBC TV 18 Global Leadership Summit. Hurry! The contest ends on 10th of November 2024. Answer now and you could be one of the 5 lucky winners. Welcome back. You're tuned into Markets Forward. As promised, let's get the top corporate voices that we had earlier today. First up, Tata Steel reported a better than expected set of numbers. However, the stock slipped following muted commentary from the management. The management said that the domestic EBITDA per ton is unlikely to exceed the levels that we saw in the past quarter. This as steel realizations will be lower, which will offset any kind of benefit they'll get from lower coking coal cost. However, they added that the goal is to reduce the net debt to EBITDA ratio to around 2.5 times within the next couple of quarters.
Okay, let's move on to the healthcare space now. Apollo Hospitals was one of the top Nifty gainers today, and this on the back of some very strong numbers in the second quarter, as well as positive management commentary. The management says that the company is expecting occupancies to be around 70% in the second half of the current fiscal year, an average revenue per occupied bed to cross 60,000 rupees, with a growth rate of around 4 to 5% in the same period. Apollo Hospitals also says that it is looking at the insurance space quite closely. Okay, let's move on. IT firm eClerx gained as it remained confident about sustaining momentum in the BFSI sector, which accounts for 40% of its revenue. The company says it is seeing increased deal activity and is participating in more conversations within the financial services space, with the BFSI growth faster than the company's overall average. eClerx is also confident about maintaining margins within the guided band of 24 to 28%.
Well, and before we wrap, we'll bring you all the key market events that you need to track. Sudarshan joins us to give us all those top events. Sudarshan, take it away.
So first event that we'll be watching for is the India's weekly forex reserves that tomorrow comes out. Last week it was at $684 billion, and this is important considering the recent move that we have seen in rupee. Today also rupee has closed at the record low against dollar. Next event, and it's very important, is the FOMC decision that's going to come tonight, and considering the change in the regime in US, this is going to be the important event that we'll be watching out for. In the stock specific, first one is CAMS that will go ex special dividend and interim dividend, and second is Dabur India. Next is results that tomorrow we have first one is SBI, Tata Motors, LIC, Ashok Leyland, Samvardhana Motherson, Ola Electric and Whirlpool. So keep an eye on these stocks, these companies that will be announcing results tomorrow.
Okay, heavy day for big earnings. Thank you for that, Sudarshan. And with that, it's a wrap on this edition of Markets Forward. Thank you for being with us. All the news and updates continue after the break.